Hallo Christoph, Servus. Okay, mach mal dein Mikrofon auf Unmute, bitte.
Relativ laut sein.
Ah, dein Audio ist wieder unterirdisch.
Deswegen.
Okay, ich verstehe. Ja, gut. Ist halt blöd, weil du lieferst immer wertvolle Beiträge über China. Und mir war das gar nicht so bewusst vorher, aber mit je mehr Leuten ich rede, umso mehr wird mir das bewusst, dass wir da hier was haben, was überhaupt nicht gibt. Und die Leute ist total also es ist unbekannt.
Deutscher Soldat verliebt sich in Russland. Schlacht von Kursk 1943, Panzergrippe.
Hello, Martin.
Yes, Alessandro. Hello.
Hi.
We are all here. We start in 1 minute. Where are you from?
I'm from Italy, originally. I'm actually in Italy right now.
Okay, nice. July in
Uh,
Italy is very nice.
Depends, but it's pretty hot. Where, where, where are you? Munich?
Singapore.
Oh, that's true. You are in Singapore. Yeah, Jürgen told me.
Okay.
It's always hot there. Same temperature, 30 degrees.
Yeah, it's not too hot. Singapore is always 32. Yeah.
Yeah, 30, 31, 32.
Okay.
Nice.
Hello, Roland. Nice to meet you here tonight.
And by the way, Martin, I have a few slides, maybe, but let's see how we want to do it.
Yeah, sure. Let's wait for a few others.
Yeah,
Um,
yeah.
Also, I'm not so sure how many we are today because we never
Mhm.
much marketing for it because actually for the first time I wanted to have you here so that you can share more about what you do and
Yep.
and we keep it very simple and so that you get the feeling of what we do and then we have we can promote this to any level that you want. We have a um, 4 times a year, we have an event with the German Singapore Chamber of Commerce. There's the Innovation Circle International, and
Mhm.
that is global. And um, then we have our weekly meetings here where we discuss cases as we come across them because we have people here usually touch innovation on a daily basis. So
Mhm. Yeah, that's nice.
yeah, so we see innovation from all sides. So just this week, to give you an example, I had I mean, this is a bit difficult for me because I'm a patent attorney and I cannot make statements that from which you can derive for whom we are working. And very
Uh-huh.
often, I mean, the longer I do my job as a patent attorney, the more often I'm sending potential customers and clients away because I only want to have success stories. And this guy is a non-success story that happened on Monday, I believe, and quite a large company with uh, a paid up capital of 2-digit million US dollars, publicly
Mhm.
listed, and they have one product and developed it until the technology readiness level 9.
Mm.
Now that this capital is burned and they are urgently looking for an investor. And when I had this meeting, and then I thought immediately about you, Alessandro, that would be something for you. And
Maybe. Yeah, sure.
Yeah, I can introduce you to them if you want.
Can tell me more later. Happy to take a look.
Yes, yes. And with your slides, I really must disappoint you because we are audio only, so that we can do our interviews from the car or from wherever we are. But
Yeah, yeah.
you can explain your slides to us. And
I can still show it and explain, and if anybody see it. Should I
no,
go on video as well? I
I-
see everybody.
I would
I-
prefer if you don't show your slides and if you explain it to us. So today we are a small circle, probably because of the summer holidays. There's
Yeah.
Jürgen Brügel here, Brügel Labs. Right? Hello, Jürgen, please unmute your microphone.
I just text to Jürgen.
Yeah, I need to ask him.
See Brügel Labs. Yeah,
Ask to unmute.
Hi, Jürgen.
Yeah, you know that the
Anyway.
thing is the following. Sometimes people also prefer to stay silent. They still
Okay.
want to be part of it because, for example, recently, I mean, we started all this in Clubhouse. Clubhouse was an app something like 5 years ago. That was quite cool in the beginning, but then they somehow changed it, and it didn't work anymore. Hi, David, and then we went to, well, I don't know, we were at one point in time at LinkedIn Live, which was also not good because they always kicked me out. And then we had a few. So since very recently we do this on Zoom, and then we create a live stream to YouTube, and then we try to somehow learn the technique on how to share this on LinkedIn Live. And so this is more a test bed, and we are learning. The bigger picture is that there is a lecture series ongoing at the Technical University of Munich in the Asia campus. And we will turn the weekly meeting that we have here in a question and answer discussion forum that is both for the ongoing students, for the alumni, and also for experts from outside. So that's the long term. It all turns around books that I'm writing, and the books are mostly about innovation, but also about AI. But also we have other authors here as they come and go. I mean, it's more an open forum that we have here, and we always look for people for reinforcement, for people who touch innovation on a daily basis. And we have by one of my books, the 4x4 innovation strategy, I define innovation as having 4 big areas, which is the R&D part, then the freedom to operate part, then the IP protection part, and finally the market response testing, plus an extra area. This is where we put you in, the innovation financing part. Of all those parts, now guess what is the least important one, Alessandro? Just to give you a heads up, the IP part is the least important. Also, I must say, if IP or patents become important in an innovation project, there's most of the time is very, 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 very important, and it can kill a project if you have not a proper IP protection. But I would say from 30 years in this area, the most important one is the market response testing part, often overlooked and very often the reason for bankruptcy, and followed by freedom to operate. I've seen more companies going bankrupt by not doing freedom to operate properly than by having a bad product. And that gives you already the outline. And without the innovation financing, no innovation would happen ever. And that's why I also consider that as very important. So yeah, and we have you here, Alessandro. Maybe you say a few words about yourself, and then you just start with your slides, and I leave it open to you. This is really easy going here.
Okay, well, thank you, Martin, for the introduction. Yeah, I will introduce myself. It will be also good to get to know, or just maybe have a summary of everybody and the background.
No. Alessandro, forget it. That doesn't work. I can tell you.
Okay.
Everyone
Well,
here, as far as I see, has to do with innovation. Maybe I do a quick round.
Okay.
The
Well,
core-
where I was going was actually I was first gonna ask everybody if there are burning question or topics that they want to cover. Jürgen asked me
they
just
will grill
generally
you.
speaking
Trust
about
me,
venture
Alessandro,
capital,
trust
but
me. They will grill you at the end. I mute myself,
okay.
and you have the stage. Go ahead. I will only interrupt you if you become silent or if I have a really
Yeah.
burning question.
Well, anyway, so you can ask question anytime, and I try to answer. Again, my friend Jürgen, ex-colleague, asked me to come and speak about venture capital, so it's a pretty broad topic. So I just want to make sure it's interesting for everybody. That's all. Anyway, uh, and so you don't want slide, or should I pull up some slide? I don't know if people watch or not.
You decide, my friend.
Yeah, okay. Well, I'm gonna share and mostly it's about speaking, right? So let me see first if I can find 1 second. Give me just a sec, okay? Um, Actually, having a problem. Okay, well, just 1 more second because I cannot find the slides.
While you are looking around, can I say something
Oh
that
yeah.
lies on my
Yep.
heart? Because
Go ahead.
you are a venture capitalist, right?
I work in venture capital, yes.
Yeah. So, I mean, I know venture capital for a very long time. And my impression is that since we have no longer negative interest rates, there's much less venture capital around as compared with
Well,
before.
well, so venture capital now is global and is in many parts of the world. So, first of all, I work in San Francisco, Bay Area, and focus primarily on United States, North America, but also doing deals in Europe and Asia, and interact with VCs pretty much across the world. I don't have the latest figures, but actually my impression is the opposite. The number of venture capital has been growing and is growing. But I have some numbers I can show you. Right now, the total investment is down from the peak of 2021. That was the last peak, but it's down for different reason, and it will go up for sure. So in my view, the interest rate is not what's driving venture capital because venture capital is a very long-term activity. The funds, once they raise money, they actually typically their lifetime is of 10 to 12 years. So we are speaking about many years where interest rate can change in different ways over 12 years. So I really don't see right now what is driving venture capital actually is what is always driving venture capital is exit, meaning when a company gets acquired, bought by a bigger company normally, or when it goes public. That's what constitutes exit and is really the goal of venture capital to invest in companies that have an exit because the exit represents what is called liquidity when they can get the cash back, hopefully with a big return. And that's driving venture capital. In the last 2 years, in the United States, there are not been the M&A, so merger and acquisition market has pretty much been shut down. And so also the IPO, the company going public, there are not been many. So there have been very little liquidity event. And that's what's currently brought down venture capital from the peak of 2021 in terms of fundraising. Anyway, so I hope it's of interest to you. The idea is to give you some general notion about venture capital and corporate venture capital with a focus on Silicon Valley, which is where it started. I will say in the late 50s, early 60s. And so Silicon Valley, so the San Francisco Bay Area, it's really the hotbed of venture capital. And currently, everybody is still the number one place in the world for venture capital, where a lot of companies are actually coming more and more from every part of the world, from China, from India, from Germany, to raise money and also to do business in United States. I think you passed my bio. Don't want to, go in details. That's me. You see me. So I'm currently in Italy in vacation. Well, vacation. I'm working from here, but I'm based in San Francisco. I've been in the States for over 20 years. Actually, so how I met Jürgen is because we were colleagues in my early career. I was working at BMW. I started working in the US and then actually Munich and then back in the US. And so I was actually working with Jürgen in the technology innovation group of BMW, developing new product, looking at the future, and looking for startup company to develop a new product. And also what is called open innovation. I also work with another German company called Siemens. So I have quite a bit of experience with Germans. Having worked 11 years in German companies. So I was for 4 years also in Bay Area in San Francisco in a group of Siemens that was under R&D. And he was actually doing open innovation for Siemens, meaning he was looking for startups. So innovative companies with breakthrough technologies to collaborate and to develop products or to create new business or to do also venture capital investment in those startups. And I was doing that in different sectors like automotive, energy, healthcare, industrial automation. Anyway, later on, also actually, I've been in startups myself, but also I worked for other large corporation, a Japanese one, doing venture capital for them, meaning looking for investment. And also more recently, I did work for Hyundai, the Korean automaker. I was in their venture capital group doing investment and business development to create again new businesses or new products for Hyundai. Anyway, I'm an engineer, studied mechanical engineering in Italy, in Padua, my city, and then I went to Stanford. That's how I started. I went there for my master in aerospace engineering and did my PhD mechanical engineering. Actually, I did under sponsorship by BMW, and that's how I got hired by BMW and I started my career. Also have an MBA, so overall, over time, I moved into business, and I spent some time in Singapore at INSEAD. And then later on, actually, I did work in Asia for over 8 to 9 years in a startup. I went to open China, Japan, India markets in automotive. And then I worked for a Japanese company and for Hyundai. So for over 10 years, I've done business between California and Asia. And so overall, my over 20 years career, I've been in what you can call innovation, done, corporate innovation done in different ways. But anyway, here I wanted to maybe just tell you about venture capital in Silicon Valley, and you can ask question anytime. And so Silicon Valley is actually more of a concept than a geographic term. People use it geographically, but it's really the concept or coming from silicon. So Silicon Valley is actually the Bay Area, the San Francisco Bay Area, which is an area of about maybe 150 kilometers in length and 50, 70 kilometers wide. And in this area, there are about 7 million people living, including San Francisco. And it's really the hotbed of innovation of technology and United States and really now globally. So it's overall a small area, but with a high density of companies in any sector and really any type, any shape, any size. So in terms of venture capital funding, and we'll see later some numbers, the United States together represent 50% of the total global venture capital funding. So if you look at the world, US, it's half of it, which is already remarkable. So a lot of money are poured into startup in United States. And then of the 50% of United States, Bay Area, Silicon Valley represent, depending on which year, represent, I would say, around 40%, between 30 and 50%, so average of 40% of United States. And translated globally, basically Bay Area see about 1/6 of the total venture capital funding in the world. And so for such a small place, you see what's the concentration of money that is invested in that area. And now these days, right, the money and go in pretty much any sector. It used to be in the late 90s when I first went, and also when Jürgen was there with BMW, that was mostly IT and internet, and the first companies like Yahoo and Google and so on. But today, really, we see innovation and investment in any sector. Of course, semiconductor, robotics, biotechnology, medical technology, of course, automotive, mobility, transportation. There are different terminology, energy, industrial automation, and now also food technology, agri-tech, agriculture technologies. And of course, the buzzword of the moment is artificial intelligence. And Silicon Valley is, of course, it's a special area that everybody's trying to replicate in the world, and nobody has succeeded yet because of unique characteristics, very hard to replicate. But anyway, it's a center of famous and strong universities like Stanford and UC Berkeley. And then in that area, there are, of course, the headquarters of all the largest technology companies that you can think of today. The most famous and actually the most valuable, according to their valuation on the stock market, all the top 7, pretty much Google, Apple, Meta, Nvidia, Tesla, Broadcom. Now it just became over $1 trillion company. Now all those companies are worth $1 trillion, not billion anymore. We are talking about trillion. And Broadcom was the last company, still public company, semiconductor, to pass the $1 trillion value. So those companies are all there beside Microsoft, which is in Seattle. And again, there is a very strong diversification in sector. You can find pretty much any industry from aerospace. It used to be semiconductor, then IT. And so every maybe 5 to 10 years, there is a new technology wave. And these days, again, is the era of artificial intelligence. But also, not only American companies are there. There are really companies from all over the world that over the last, I would say, 20 years came to Silicon Valley to set up an office. And talking about German companies, there are many of the large companies in Germany, from BMW and Mercedes. They were the first automotive company actually to set up a shop in Silicon Valley, exactly to learn and see what was going on there. And then following BMW and Mercedes, the Volkswagen came, and then also the tier 1 supplier like Continental, Bosch, ZF, and others have a presence. But pretty much you can find all the largest company in the world, like Samsung. The Koreans have a strong presence, LG, Samsung, Hyundai, and other minor company. The Japanese, I think they have over 1,000 companies in the Bay Area.
Short
French
question,
companies and so
Alessandro.
on. Please.
A short question. What is attracting these big companies? Aren't these a little startups?
What is attracting those companies? Why they come there? They
Yes,
come there.
are these all these small little startups?
No, I was talking about Hyundai and BMW and
No,
Samsung.
why are they all
Oh,
there?
right. They are there because they are mostly looking for startups.
Ah,
They they come to find to well for different reasons, but they come mostly to find what in a broad sense you can say innovation, and they have different type of office. Some are more focused on R&D. They come there to develop to have an R&D center and to tap into the talent pool of engineering, especially software engineers of the Silicon Valley. But they also come there to look for external companies, mostly startups, that are innovating or creating new product or developing new markets to either learn or to cooperate with those startups to develop either a new product or even a complete new business and enter new market and stay at top of innovation. That's in a short word. And how they access that innovation, they do it in different ways. In some cases, they do through corporate venture capital investment. So they invest in startups, like I've done at BMW, Siemens, Hyundai. And then they develop commercial agreement or R&D relation with those startups to develop a new product based on the technology and the intellectual property developed by the startups. They also come sometimes to work with the universities like Stanford and Berkeley, so with professor and student. So there are several reasons, but the unifying factor is the innovation happening in Silicon Valley. And if you can see the slide here is just a representation of the density of companies that are in Silicon Valley these days of any color, shape, size, and sector, pretty much, and coming from all over the world. And so just in Bay Area, I was looking this year at how many startups are there, and I found different numbers depending on the year, on which year, but on average is that right now in this area there are about over 15,000 startups in Bay Area. That represent over 20% of the total startup of United States. And that's a pretty impressive number. In the last 10, 15 years, also San Francisco, the city, which is at the north part of Bay Area, now has developed, has become a hub for startups. 20 years ago, startups were only in the south part, Palo Alto, Sunnyvale, San Jose. Now startups are in high concentration in San Francisco, and so are venture capital. So the city of San Francisco now see a lot of innovative companies itself. Actually, so Bay Area itself has something. One metrics that venture capital look is what startup that are unicorn. Unicorn, right, is a rare animal. And so now unicorn is referred to startup that are worth $1 billion. Sometimes there are startup with basically no revenue, but they're already worth $1 billion because they have such a potential technology that can transform sector. Anyway, Bay Area has over 377 unicorn, and 244 are in San Francisco. It's the number one area in the world for number of unicorns. And so here's some numbers. Between 2021 and 2024, last year. So 2021 was the peak year of venture capital worldwide. So there have been ups and downs, but until 21, venture capital has been growing. And so the money that were deployed worldwide were 600 billion, almost $1 trillion. I mean, 60%. Now the number is down to 370 billion worldwide. So it went down because after the post-COVID shock, for different reasons. The number of investment and the money invested has been decreasing post-COVID, but it's going to increase again. It's already increasing. And so eventually we'll pass again the $600 billion. Anyway, US, as I said, is half of it. So US saw $300 billion invested in 2021. And in 24, the investment were about 180 billion, so almost half of it. So certainly down. And Bay Area, though, is representing 30 to 50% of the US. So only Bay Area had over $100 billion invested, in 21. So a sixth of the world of the total investment happening in Bay Area into startups. And now it's pretty much stays steady, driven mostly by the artificial intelligence boom. A lot of money today in venture capital are going into artificial intelligence company and biotech, I will say. Those are the two current major trends. So last year was $90 billion in Bay Area, so still quite high, actually. And then of this total venture capital money, about a quarter of those, and this number has been growing, comes from corporate venture capital, meaning from the corporations like Samsung, Intel, Google, BMW, and so on. And so corporate venture, where I spent a lot of time in my career, is slightly different than venture capital. I'll explain you more later why. And again, now in Bay Area, there are over 1,000 venture capital firms just in Bay Area. It's about a third of the total firms in United States. So again, you see how important by number is the venture capital how important is Bay Area in venture capital. Beside Bay Area in the US, there are other areas that have been growing in terms of technology hub, like of course Boston, New York, Austin. Those are the primary, the other big area of innovation and startups. So the big cities, not surprising, they're always close to some universities and capital, and also talent and good lawyers. But they are far behind from Bay Area. They're all trying to copy, but they're all very, very far behind. And again, just to show you this, and then maybe we'll keep more free flow discussion. Again, these are official numbers of the 2021. You see the numbers deployed. So there are 4 charts. The upper left chart is the number in venture capital deployed since 2016. In the United States, as you see, it basically 21 was the top. But then also in those years, 19, 20, 21, so during COVID, Bay Area, Silicon Valley had seen consecutively over $20 billion invested each quarter, right? So it's a lot. And again, so there basically been a boom in investment in startups until COVID, and then there have been a slowdown. But again, it's cyclical. And, again, if you see now the 4 chart on the lower right, you see how the United States had over 70 billion deployed. That was the second quarter 21, so it's just a quarter. And Europe at 30 billion. So basically you see United States is double Europe in size, and Asia is also very big, of course, with India and China, is bigger than Europe in terms of investment. But pretty much US, it's almost like half of the world. One more thing to maybe start more discussion, it's if we look at numbers now on artificial intelligence, those are actually all the numbers of last year. If we're looking at the top 8 private private company. So basically startup company in artificial intelligence, not the public one. The public one are, like Microsoft, Google, Nvidia, they're all artificial intelligence related companies. But the private one, like you've probably seen, OpenAI is the most famous. Of the top eight by valuation, seven out of eight are in US and specifically in San Francisco. So OpenAI is in San Francisco. The second one is Anthropic, Databricks, Shield AI, Figure.ai, Light Matter, and other. You might have heard some of those names like Anthropic and OpenAI. They are all in San Francisco Bay Area, nothing else. So they tell you what's happening. The only non-American company out of the eight is Mistral, which is a French company. And that was the number of last year. If we look at the number this year, because those companies got more money invested, there have been more round of financing from venture capital. I think now out of the top 10 company in the world, the private, there is no European company. They're all basically in San Francisco. So San Francisco now is the war capital of artificial intelligence. So between the public company and the startup, there is so much going on that eventually, usually from those startup, when some of those company will become public, some will be acquired. There will be bigger business coming up that are gonna transform entire industries. So this artificial intelligence thing is happening for real and is gonna change industry and business worldwide, and it's really happening in San Francisco. Anyway, I pause here and see if you guys have any question or some clarification, and then maybe I can continue my talk from here.
Just a little remark. I'm getting scared. We in Europe are investing in gender-related toilets instead of anything what makes sense. That's all I have to say.
Well, venture capital has actually been increasing in Europe also over the years. There are more funds, right? Some money come from the European community through central funds, like a European investment fund or, and so on. So Germany, France, UK, they're all bigger, and there is also AI things happening. So in Europe are certainly good opportunities, valuations are lower, and all of that. It's just that the pace, the speed is not keeping up with what the speed and the scale of United States. So we'll see things in Europe as well. It's not only, smart toilet, as you say, which anyway could be a good business. But yeah, the pace and scale, I will say that Europe has several problems. Now it's hard to, discuss about Europe. You guys probably know more. I see more the United States side. I can tell you more what's happening in US, but the scale is a problem. Europe is still very fragmented in terms of market, right? When you are a startup in Germany or France or another country, then you want to potentially expand, right? There are a lot of barriers. Regulation in different countries are still different. The language, the culture, America, US is still an homogeneous market. So from day one, companies in California, in New York, in Texas, from the first day they set up, they already know that they have in front of them the US market. And they go to conquer US market from day one. So they think big from day one. Israeli startups are interesting. Israeli, as you know, is a very high-tech country. It's a very small country with 6 million people, like the size of Bay Area, but has been called the startup nation. They develop a lot of great technology, especially from military. And then when the people finish military, many of them, they create startup. So the Israeli government years ago was very good in creating the venture capital ecosystem and creating many, and then Israeli also very entrepreneurial by, culture, history, and other factors. So point is the Israeli startup create, technology there. They create maybe a new product and they develop the first prototype, the first concept in their country. But then they know that they cannot create a big, strong business if they only look at the Israeli market because it's only 6 million people, more or less, surrounded also in part by enemies or other different markets. So from day one, Israeli startup, they know that actually they go to United States. They develop the prototype product in Israel, and then in the second round of financing, when they need to start commercialization, they many times they come to United States. They raise money from venture capital in US. They open an office in US and they start sales and marketing in the United States. So US become their first market from the start. Now also is happening that they also look at China because China became a large market. Although in terms of spending, it's not as big as United States. It's big in terms of population, but not spending right per person. However, several Israeli startups years ago were attracted to China for the same reason and because of the Chinese government was giving subsidies and incentive to bring technology into China. Anyway, but now we see also, I see actually as a venture capital, I'm currently working in a VC, a small venture firm in San Francisco. And actually here I do some advertising. It's called VU, Venture Partner. The VU stands for Venture University. So beside investing in startup, we have an education program to teach people venture capital substantially. The two general partners, Skyler and Andrew, they create, they're longtime VCs in the US. Skyler is from Texas, Andrew is from New York. They've been investing separately. They came together 7 years ago and they created VU to actually create a sort of university to start educating people and give a formal training in venture capital. So they're running this venture university program in San Francisco, out of San Francisco, but over the years, actually, they have set up a global network. In fact, they have a partner in Hong Kong, and they have now a partner in Munich, Andy Goldstein, and one in Sofia, Bulgaria. So actually, right now, when we have the classes on venture capital, we have a team also in Germany or in Europe that attend. Most classes are in a way, I will say online, real time, but online, with people from all over the world. We have people all over US, Canada, Brazil. We have a strong group in Munich, in Germany. And actually, I might move in next year in January to London to open a London office to tap into London ecosystem. Anyway, so these programs are structured and there is a combination of lectures and the basics of venture capital, but then it's also combined with the practice by really doing the work of venture capital, by sourcing deals and doing deals and investing in companies. And so typical people attending and becoming student are sometimes just, the young guys out of MBA, maybe that want to learn and want to enter into venture capital, but they don't have the experience. But they're also more mature senior people that maybe have been for 20 years in an industry and they are a specialist in their sector and they want to now apply their technical skills or business skill domain into venture capital. There are also bankers or other finance people that want to change focus of investment and learn venture capital because venture capital is actually it's more of a science, it's more of an art than a science in a way. Anyway, point was that to say that there is some, attempt also to create a next generation of venture capitalists that have more formal training and that are better educated in venture capital, worldwide, really, not just United States, to really enable innovation across the board. Sorry, I pause again. see if there is any question or any topic that you want me to touch or reply.
Yeah, actually, I have a question. First of all, thanks a lot for this very interesting speech. I'm interested in the success rate of venture capital investments. So you made it absolutely clear that the objective to be obtained for venture capital is exit. So let's say out of 10 investments you make, how many of the startups really reach exit? And out of those who reach exit, how many of them in the long term are successful in the market? So I'm absolutely sure not everybody can be a unicorn, so there must be failures. So what's the failure rate or the success rate?
Yeah, so let me first put in perspective. So success is measured in different way, depending on the reference. So there is the entrepreneur that build the startup, the company, right, and the employee. So I tell you about the players in the ecosystem. Then there is the venture capitalist, the venture fund that invest, so the investor. And also there are the limited partners. The limited partners are the individual or those could be rich people, individuals, or family offices typically, or pension funds, or hedge funds, or endowments of universities that actually have money and they are looking for venture funds to give them the money. So there are these, it's like a cascade. The LP or limited partners are the one that give money to the general partners of a venture capital fund. Then the general partners are the one that deploy the money into startup company built by founders. So these three players have different goals, right? And different metrics to measure success. So the GPs, I'll just tell you the mechanics of forming a fund. The GPs, every maybe 3 or 4 years, the successful one, they go out in the market looking to form a new fund. So let's say 2 general partner, like the one I'm working for, right now they are raising their third fund of $50 million, is relatively small. And so what they're doing, they're spending typically 12 to 18 months talking to limited partners, family offices, pension funds like Canadian Pension Fund, sovereign fund like maybe in Singapore, Saudi Arabia, and so on, to raise money. And so they basically raise maybe after say 18 months, they're able to raise 50 million, 100 million from the limited partners. So why the limited partners invest? Because this is called venture capital, so it's considered risk capital. It's high risk profile asset class. If you're an investor, you can invest in many things, in public market, NASDAQ, stocks. You can invest in debt. You can invest then in private market. There is private equity, which is more focused on investing in mid-sized company, maybe in consumer infrastructure, oil and gas, and things like that. Venture capital focus on technology, so more on the innovation, more on the new stuff. And yeah, so ventures capital is high risk, but because it's high risk, it's potentially also high return profile. So at the end, it's all a financial game. The limited partners put money because they want to get those money back with a high return, typically 5 to 10 times. So let's say a pension fund maybe put $10 million to give to the 2 GPs. They want eventually, after 10 years, at the end of the fund normally lifetime is 10 years. At the end of the 10 years, they want the $10 million back, but they want to multiply by 5 at least. So they really want to back, say, 50 million. That's the reason why they invest in venture capital. And there are venture capital that can generate that type of return and other venture capital that eventually cannot. But you really can measure it only after 10 years. So it's a really long horizon return. Now the GP, they collect the $100 million. Once they have the money, then they start looking for the startup to invest. And so from their point of view also, they invest in startup that are small, but they are awfully promising, and they do that after a long, deep analysis. And they analyze the whole business, the potential, they analyze the team, the technology, the intellectual property. So it's a very comprehensive type of analysis to kind of really assess the future. How big is the market? And sometimes really we are talking about market that don't even exist today. So it's really about a little bit ability to understand the future, to bet, to find the right horses on which one you want to bet. But the game for general partner is exactly this. They deploy this $100 million, a little bit less actually, because 20% of the money actually goes for their expenses. So the actual money invested out of $100 million is really $80 million. So typically 2% is called the management fee. So 2% of 100 million is 2 million. So 2% a year for 10 years is 20 million. So 20 million go to cover expenses, the salaries of the team, the office, the travel, the lawyers, and so on. So what they really deploy is 80 million. They typically deploy 80 million over the first 4 years. And they look for startups. So they maybe do 5 to 10 investment a year. They build a portfolio of 40 startups in 4 years, or maybe less, 30, 40, depends on what also stage, sector they intend to invest. And obviously, really, their game is out of those 40 startups, a lot of them, because these are high-risk companies, many will fail. In 10 years, they might not be around. They might maybe be around 5 years, 7 years, 6 years, 3 years. But they might. So some of those 40 startups will fail, and they will just stop activity. They won't be able eventually to bring a product to the market, or they won't be able to raise more money to sustain their business because initially it's not profitable, and so on and so on. Many reasons why a startup could fail. But some startup actually will exist. They will maybe have a business, a decent business that grows. It just maybe it won't grow fast enough to become what is the exit for the venture capital, because when they really make money is when the startup get acquired at a multiple of what they paid, or when the startup go public, right? And so in some cases, it takes more than 10 years to go public, or maybe more than 10 years to build a business. So there are startups that maybe still alive and do a good business and they grow, but they don't have an exit yet. So is that bad? Well, for the venture capital people and the LP, yes, because they don't have liquidity, but they still may be good businesses with product. They just didn't explode. So there are situations like that. So that's why it's not that everything fails or go public, right? There is also a lot of gray zone in between. But from the venture capital perspective, really what they want is exit. So they want, because they invest in a company, that is worth, 50 cents a share initially when they find 3 guys in a garage with an idea, and then they sell it. Company got bigger 7 years later and get acquired $1 billion maybe, and so the shares, each share has grown in value from 50 cents to $20, for example. And the difference is what the general partner really cash. And the way they split the profit is that the general partner of the venture capital, so first they return the money to their limited partners, so they're 10 million, for example, to the pension fund. And then the profit, the difference, 80% go to the limited partners. That's how the limited partners can get a lot of money. And 20% of the profits stay with the general partners. So for limited partners and general partner is really a financial game. For the startup and the founder is also, of course, but really those founders are driven by the fact they want to build a business, bring a product to market. Many have a vision of changing the world. Many of them, they have typically big visions on how to change an industry, change the world, change something that they solve a problem, really. Every business is typically focused on solving a problem in whatever industry, in whatever sector. That's what drives founders to create companies typically. And so anyway, there are companies that still alive and exist and grow, but they don't have an exit, and so they are not maybe considered successful from venture capital point of view, but they're still successful in their business. And so that's why the metrics is slightly different. Now, how many really fail? How many really go IPO? I don't know. Statistics change a little bit, but you can say that out of 10 investment, typically maybe 1 or 2 out of those 10 have an exit, right? So then they are successful from a venture capital point of view, and the other 8 or 9 either die or don't get to an exit. And so they are not of interest for venture capital. So at the end, the venture capital general partner, out of their 40 investment, 30 investment, for example, they care really to have maybe, they typically, the statistics is that maybe 30, out of 40, maybe 30 companies don't have an exit, fail or don't do so well. Maybe 5 companies do decently, and they maybe get acquired with a small, return. And maybe 2 or 3 companies do very, very well. So they're looking at those, 1 to 3 companies that go public with high return multiples. Those maybe 2, 3 companies are the ones that are really generating the return for the general partners. That's why it's kind of for them a statistics game. They invest in many companies to find those 1 to 3 that give them a lot of money, and the other they really at the end don't care in a way, and that's their perspective. So you can say it's maybe 9 out of 8, 9 out of 10 don't give you an exit, and there is the 1 out of 10 that potentially give you the large exit. That's the way venture capital look at it. Did I answer?
Okay. Yeah, you answered my question very well. You perfectly described the inner workings of the venture capital world, and you gave some figures. Thanks a lot.
Sure. Anything else that I can?
Alessandro,
So we are almost at the end of the time. Happy to come again and spend more time if
Yes.
you want.
Please do so. Alessandro, let Rich ask you a question.
Of course.
Alessandro, thank you for the presentation. It's been interesting. My name is Rich.
Hi, Rick.
My question really is related. Well, my question really is related to your, current investment thesis and also understanding how big a check your organization typically writes, and also the types of criteria that you're looking for in a company.
Yeah, okay. Well, in general, first of all, right, every venture capital is different because they differentiate, when you approach venture capital, actually, if you're a founder or a company raising money, you need to do your research on which are the best venture capital for you, because some are very general. They focus on many sectors, AI, robotics, automotive, medical. Other are very specialized. They maybe invest only in medical diagnostic. Some tend to focus on geography. Typically, venture capital has been a very local business because also the partners tend to go on a board of the company. So pre-COVID, everything is kind of done one-on-one, face-to-face. And so, venture capital in Seattle will likely probably just invest in Seattle and Bay Area, more West Coast, and even going to Colorado will be taking a plane and long flight, and it will not work. So same in Germany, German VC probably tend to invest more in the German area, Munich, Switzerland, same language, same culture and geographic distance. But over the last few years, we see also now, VCs that tend to be through Zoom, right, to be more global. And so anyway, so geography is one parameter, the other is the sector, and the third one is the stage. Some VCs focus on very early stage, more like when a company starting the business, or when they're looking for seed capital, like the first $500,000, $200K, $1 million type to start. Other focus more later stage. There is seed round, then there is A round, a B round, C round, D round. You can have many rounds. But typically, company in the B round, they start already generating revenue, having a product in the market, and then C round, the B, C round are for scaling. So some VC tend to have a bigger fund, right? The bigger the fund, the bigger the checks they write, and therefore they tend to go later stage. So you have to look at all those things, right? But anyway, the fund I work for, VU Venture Partner, we are a small one, and we are operating out of a $19 million fund, the second one. And so that really allows us to do typically early stage investment. We focus more on, I would say, seed A round. And we write small checks like $200K, $200,000, $300,000. Now, interesting though is that the two general partners created a model that when they invest, say, in a company, they're $200K, they also decide to open the investment to all their, say, friends or business people they are connected, and now they have a database of 5,000 people. And so anytime they decide to invest in a company, then they present the same deal to these other 5,000 people. And out of 5,000 people, maybe 50 people decide to invest as well. So putting money out of from their pocket. And so these other 50 people are kind of bundled together in what is called SPV, or special purpose vehicle. So instead of everybody writing a check to the company, it's kind of bundled together. Is the sum goes as a one entity into the company, into the startup. So by doing that, they're basically able to double the investment, which is kind of a smart thing to do, and other VCs start doing that. So anyway, we focus early, but also we have done sometimes we do late stage as well. We still write a $200,000, $300,000, $500,000 check in a round, even if it's late stage, and so we just have a much smaller percentage. We also then VCs typically invest also when they believe in a company doing well. They tend to invest also in the second round and the following round. So those are called follow-ons. And so you see that VCs they invest in the first round, and then they keep investing if they believe in the company and if they have the money to do that. So there are different strategies and way to optimizing the returns and the investment. We are basically a generalist. We invest in different sectors.
Alessandro, sorry to interrupt, but we have really reached the end of our hour. So
yeah, no problem.
Rich, has your question been answered, or maybe we continue next week? Or
I'll show up next week and I can answer other questions for 15 minutes or so.
That would be cool.
Sorry, can you share your slides? Is this possible?
Yeah, I will send it to you and Martin, and you can share.
Okay, we will. We will put you on LinkedIn and others.
Yeah, let's connect on LinkedIn as well, for sure.
Sure. Okay, Alessandro, I thank you so much. And I thank also the audience for coming here. And
thank you, everybody, for listening.
1,000 questions for you when you come back next time.
That's fine. That's what I was hoping for.
Okay, thank you, Alessandro.
Thank you, Martin. Thank you, everyone. Have a great afternoon or evening in Singapore.
Bye-bye.
Thank you.
Bis zum nächsten Mal.
Thank you. Bye-bye.
Jawohl.